Uber shares have been volatile over the past 12 months, but the chartmaster thinks it might be time to take the rideshare stock out for a drive. For more on this call, let's bring in Carter Braxton-Worth of Worth Charting. Hey, Carter.
Hi, Melissa. Yeah, we can go right to the charts, but what's important to note is this is a stock that's been range-bound for a year. You can see it here on the first. That's sideways, choppy, albeit, but sideways is what a fallow asset is when the market's been going up. Every sector is up on a trailing 12-month basis, except energy. The market's up 10%, and this stock, punch. Let's draw some lines. So they're all identical charts. The next iteration, that's a beautiful uptrend since 2022. We've checked back to the penny over and over and over, and we're down to trend yet again. If you add a downtrend line, you'll see we have, some might call it a wedge, a triangle, doesn't matter what you call it, it represents a standoff, and it's our judgment that it's likely soon to be resolved. Another way to draw the lines is, of course, to put a flat top on it, and that's an ascending wedge, if you'd like to name your patterns, but that's what a breakout candidate is, something that's after a big move and churning sideways. Another way to draw the lines, all the same chart, would be as follows. Simply drawing the internal trend line, in effect, since the highs of 2020, the post-COVID bounce. And then finally, you can see this iteration, and you'll say, well, what is that? Some people like to name their patterns. These are setups. It doesn't matter whether you call it the so-called cup and handle. This is a bullish setup. We're playing for a breakout here. Uber, a fallow asset that we think is about to come to life.